I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with the wealth consultants at Five Plan Partners. Now, here's Senior Vice President and Wealth Consultant Ashley Page.
Rolling in 3, 2.
Welcome to Investors Insights, episode number 78. We're delighted to be with you today. Our topic is investing in energy companies relative to the recent slide that we've had in oil and gas prices. We thought you would appreciate some information on that to help you make some better decisions and live and work more confidently with your investments in that sector. To go back just for a moment, what you'll see is from June until now, the price per produced barrel of oil has dropped more than 30%, about 38% to be exact. It was around $100 per barrel at the end of June. Now we're talking production in the range of $66 per barrel. So when you look at it, that's quite a slide in the price of a barrel of oil since the end of June. And we wanted to give you some interesting talking points of that. Number one is Greg Powell, our CEO, always says, and he's quite right in this, when you have technological ways of doing business breaking down, that has a tendency to disrupt the old model. I'm 56 years old, and what I always remember from high school is price of a gallon of gas, and what was it? OPEC, OPEC, OPEC. Now what has happened is, of course, in the United States, we've got a major fracking technology going on. And if you will, that's made North America the axis, if you will, from Canada running down through the United States, down into South America. That is an axis now of exporting of energy. That has busted the old model of the way oil and gas is set. So what we've been looking at here lately is what that will mean for us going forward. Number one is it will mean much lower input costs for a lot of industries. It will mean a lot of lower input costs for many different industries across the economy. However, one thing that we saw that was interesting yesterday, and we want to use this as a talking point as to why when you look within a sector, you just can't buy a lot of different types of companies as investments in a sector. Energy is a great example of that. Again, we've seen a large price drop since the summer. And a lot of these oil and gas companies, we noticed yesterday, some of the larger multinational names that you know, the market was up nicely yesterday, and they were the bell cow that were leading that. So the question is, you need to look at how could you be up in stocks like that when you're having such a depressed drop in prices? Well, the answer is the type of company that it is. When you get in an environment, in any industry, it could be energy, but really it's more broadly based, and you're getting a significant drop in the prices for the goods that you sell. What are the companies that survive that? The companies that survive that are the ones that have multiple lines of business, not just one, but many. The other thing that they have are very strong balance sheets where they have low debt, good capitalization, and good cash. They also have senior management teams that are able to operate at a protracted level in a lower cost environment. The ones that get hurt are the ones that have higher debt, not as much cash, more leverage, and operate perhaps in environments that is harder with a higher marginal cost to produce, like drilling off the coast of Brazil or in the Antarctic. So what we want to share this with you is we think it's a great lesson, and it's energy specific today, but it could be more broadly based. And that is when you get a precipitous price drop, you always want to gravitate towards those companies that are the bigger battleship. They have a tendency to navigate the choppier waters much better. You just don't get as much yawing from side to side, even though the waves are hitting it, than you would in a small boat. That's probably the best analogy that we can think of. So those are the ones that you want to look at, but we think it's a great example of how you can have certain companies going one way with a precipitous price drop and certain companies moving the other way. It's a good example of when you're looking at your investments, you have to look at it in a granular nature. You can't just look at it broadly by sector and invest that way. So we hope this helps you. if you've got more questions about it, obviously with the energy prices dropping like they have, we've had a lot of questions about that from clients and friends wanting to know what's going on. You can certainly tell it to the gas pump. That's good. You know, that helps consumer spending. But that's a great lesson in how you can't just invest in many different types of companies in one sector. So we hope that helps you, and we'll visit with you soon.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.